Good morning, everyone. Today we had the CPI data, the inflation number that came out. I think that's just like the main headline to go over today. I don't really think there's that much important news. Like you could talk about FTX, right? Bitcoin. You can talk about crypto. You can talk about Meta layoffs, right? 13% of the workforce from Meta. You can talk about energy, anything, honestly, even like the midterms. But it all gets engulfed by the severity of the inflation data, the CPI that came out this morning. The CPI that came out this morning, we were expecting the October numbers, a 7.9 to about, I think it was like 8.1 range, the expected CPI to come out for the month of October. Came out softer print, 7.7 was the overall number. If I do take a look at financial juice here quickly, I just want to see what the real number, well, not the real numbers, but what the other numbers are. And the inflation rate that came out softer, right, 7.7 versus the lower end of the band, which is 7.9 expected, right? This is causing a large flow, a large bid in the market that opened up due to this because you could see a potential topping pattern in inflation. That's exactly what investors and larger money are looking for, which also puts into perspective what's going on with the Fed right now, because the Fed is expected to hike again in December. And that hike, just yesterday, the 50 basis point hike was priced in at about 56%. Right now, that 50 basis point hike is priced in about like 81, 82, in between 85, between 80 and 85% of chance of a 50 basis point hike, which is what a lot of people would call a Fed pivot. I wouldn't necessarily call it a Fed pivot because we are not cutting necessarily. There's still rate hikes to come. There's going to be rate hikes to come into the following year as well. But as it stands right now, there's about 80 to 85% chance of a 50 basis point hike, which I think is going to be the case in December to wrap up the year. If we look at quickly here, the data points, US CPI year over year, 7.7 expected, or sorry, 7.7 actual number. The forecast, the expectation was 7.9 versus the previous 8.2 expected. The US month over month, which is a very, very huge factor. The month over the month number was very large, 0.6% expected in the forecast, 0.4% was the actual number. The core CPI 6.5 expected, 6.6 last month in September, and then 6.3 that came out today. So a lot of these numbers are showing softer prints, which put a lot of upside pressure in the market here, pre-market that we did trade live. So just reading some of this stuff. So again, the Fed's target is going to be 2%. I don't know how realistic that's going to be within the next like 5 to 6 months, but they're progressing forward towards that, and that could hold a softer landing, quote unquote, if they manage to do that. But again, keep in mind 7.7% is very far away from the 2.00, I guess 2% expected in that. And realistically, there has been a drop in the expectations of the Fed's funds rate into the end of the year naturally. And I think there is a lot of rallying to catch up on these tech names because they are going to be long duration names. And you can see that the NASDAQ itself rose 4.5% off of this news here pre-market, which is really aggressive. Yesterday, we did close super bearish. We dropped really aggressively. And then right now we've erased all those gains and more. And we've popped through a top, especially on NASDAQ. Big tech names are going to be on the list to watch today. Even Meta, after announcing all those layoffs, has risen really aggressively. We've popped through a lot of resistance points on a lot of these individual tech names. You can see we're into new distribution blocks. We have Amazon back at like about 92. We're at a key area right now. Google around 92. Amazon, I just said Amazon. Meta is at 107. Nvidia is back at the top of its distribution block. We're kind of holding a rotating range right now. Apple is sitting at 140-ish, right? Remember, 137, 138 is a huge threshold on Apple to kind of open up a new distribution block, right? 137 to the downside, you break 134.50, you have a lot of sell side, and now we've popped that. We're back into 140 on Apple. Even Tesla, after getting sold off aggressively due to a lot of share selling on Elon Musk's front, is now back up aggressively. So I think there could be some attempted rallying here in the tech space because, again, a softer inflation print is good for long duration assets like tech. So I do want to see how this thing opens up, because if we start dropping right off the gate, then we can kind of continue somewhat of this downtrend that kind of opened up yesterday. But I want to see if the buyers can take tech up a little more aggressively this morning. and see how we can continue this softer print, right? Are we topping out? Are we peaking on inflation? That's not necessarily an answer you can give off one or two softer prints. You have to see a trend of softer prints, maybe a 6-month rolling average. And right now, as it stands, we have a very big level here on the futures. Price is pinned between two areas, 3883, so the 83s, and 3869, 3870. So if either of these give, you're going to get that extended move, right? The 69 is holding a lot of buy side. There's going to be a lot of sell stops under the 69, so buyers would want to see that actually sustain and hold out to see if we can get that pop into the 38.95. Through 38.95, we have levels like 39.09, 39.23, and 39.30. Those are going to be areas that have failed the most recent rally, so we're going to have to see that buyers really take that through, and that's going to be tested today, and how we can get that first extended move. Can we pop through those resistances? Otherwise, we're going to see a pull down, breakdown, and absorption of the lower distribution blocks. So with that being said, that's all I have for the data this morning. I just wanted to cover CPI. There's nothing really of greater importance right now because that's the main thing that the Fed's watching and how prices react to that. So there's still talks about recessionary action in the coming months, right, leading into the next year. So that's something that we do have to consider, as well as inflation is attempted to get subdued in these coming months. So I'll see you guys tomorrow. Thank you and have a happy weekend if this is the last trading day of the week.